The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. We're kicking into spring, folks. Yes, it's going to happen. It's really going to happen for you folks in the Northeast and the Midwest. This is a quote by Duke Ellington. A believer is an optimist who thinks of tomorrow. Market-wise, let's take a look at it out here. We have the Dow Industrials up 165, Nasdaq's up 9, S&Ps are up 9.5, gold contract up $1.90, trading at $1,166 an ounce. Silver flat at $15.77 an ounce. Platinum down 13 bucks at $1,148 an ounce. Copper up 5.5 pennies at $2.68 a pound. Light sweet crude up 46 cents, trading at $50.07 a barrel. Bonds, we have the 10-year up 11 ticks. 126.13, 30-year up 1 full point and 4 ticks at 156.24. King dollar flat at 97.60. You got the euro up 11 at 1.0855, and the yen up 40, trading at 121.23. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? Now, let's go to the world of the S&Ps. What are we going to look at? We're going to start off with the SPY, folks. And what you're going to see out here is this. SPY is trading at 208.58. We've done volume out here today of 62 million. That's after coming down on Friday with 188 million. Bottom line is that what you have here, you're setting up a small B2C of an ABC structure on the way down. That's what it seems to be doing right now. Your A point on this is going to be the 212.24, and your B the 207.10. I suspect the SPY at this 208.62, 209.06 was the low that was generated out there on the 4th. It can go in and basically get into that area. More than likely, you'll see it reject price at that area. The SPY is in the lower range, not the lower range, but it's not. It's certainly, as it has broken out on February 12th. When it broke out there, it's right back inside the range. That range that we're talking about, any close under 208.97, and we're at 208.60, keeps it in the lower range. What does that set up? That sets up a test of the December as well as the February swing lows, and that is 197.86 on the SPY. NDX 100. We go take a look at the 3 Qs. What do we have with the NDX 100? Sideways move out here on the NDX 100 today. You're doing 19 million shares. It's up 32 cents. That is with the structure that on Friday we came down with 30 million to doing 19 million on the way up. Now the NDX 100, the 3 Qs, are going to have to get back inside this 106.25 area from November 28th in order to be in the lower range. The NDX 100, the 3 Qs, are still in a higher range. The Russell 2000, we use the small caps, looking at the Russell 2000. Small caps, this is what you have inside the small caps. We're at 121.79. That 121.79 is above the, it's still in the higher range. You get back inside 121.38, that's going to lay up. Then you're going to come down into this 113.03 area. If we go look at the Dow Industrials, in fact, let me pull the Dow up this way. What we have with the Dow Industrials is this. Dow Industrials, you have it up 173 today. light volume. That's the dead cat bounce. The Dow can get into 18,122. What's putting juice in the Dow Industrials today is United Technologies. That's up 254. You get Cisco up 47 cents. United Health is up 176. And Big Blue, which is a dead cat bounce, is up $2.42. Taken away from it, on the way down, you have Intel down 41 cents. Marvell is off 5 cents. Coca-Cola is down 5. And ExxonMobil is off 8. Gold contract. What do we have with gold? Okay, gold's going to have to build some cars here, folks. But what we do have is this. Gold on Friday gets down to a price point of $1162.90. You have an expansion of volume. It's not as large as how we went up, but bottom line, you have a large expansion of volume, 215,000 contracts. What you can expect there is two different things. I expect the low of last Friday we get tested. That's the 1162.90. You'll see it get rejected. Then we have to build some cars for higher price. Where am I going with the aspect of why it would get rejected or where the probability is? What you have is this. If we go over to the silver contract, what you're going to see with silver. Silver was much stronger than gold last Friday. That's really unusual. It showed some strength, which was just absolutely fabulous, actually. When I say strength in the context of the weakness that gold had showed, meaning the wide price spread. What we had out here today is silver contract has traded 2,300 contracts. On Friday, we had traded 44,000 contracts. We are at 1576. We hit 1570 this morning. You rejected that lower price. You had lighter volume. Now what you want to see with silver is to have silver stay above the $15.74. We're slightly above it right now. But that's the number. And what silver did not also do is it did not take out the swing points from December. So in that context, that's also very important. Now, let's talk about the bond market. Bonds, bonds, bonds. Bonds, bonds, and more bonds. So, on Friday, what we had is this. Friday was the first in a few years that you had some real price destruction inside the bond market. What we also had is that now we have two separate trading days that you've come off the high with volume. That's dangerous. And also what we're doing an ABC structure on the way down. We had come off the high with volume on the February 6th as well as March 6th. March 6th, we took out the B point of an ABC structure on the way down. If we go take a look at the TLT, we'll use the 20-year plus so you can see how this correlation shakes out. The TLT, the high of the TLT is 130.50. That high was established on January 30th. You came down into February 17th at 125.92. Your C point is up here at the 130 level. You took out the B point and you took it out with big volume. The B point on ABC structure on the way down had 14.9 million shares. That was traded on the 17th. Friday, we did 20 million shares, so blew it away. So what do you have here? Your A point is 138.50. Your B is 125, so we're going 138. You get 13 bucks. Your C is 130, so you're talking a 117 A to B equals C to D. What I suspect you also have here, and this is what's going to be really wild watching this whole thing shake out, is this. Is that the change of trend in the bond structures? It's looking like it is. That's the real bottom line. You'll get to basically learn more about how this counter trend bounce is happening. And certainly right now, meaning the counter trend bounce right now, we are bouncing up, and we are bouncing up on dramatically lighter volume. So what that is setting up at this particular point is another ABC structure on the way down. What it's also setting up and putting a higher probability on is that the change of trend has taken place. And what that would mean is that, number one, short-term rates would be going up. Number two, you'd be wanting to sell each and every rally inside the bond market. We came down on the 10-year with 1.7 million contracts on Friday. Today, you're going up with 890,000. That's a pretty good indication that this baby does want lower price. King Dollar. What does that mean for King Dollar? Bottom line, King Dollar, she's at 97.60. That's an ABC structure on the way up. You get a price projection of King Dollar, of 101. That's where this baby looks like it wants to get up into. So the 10-year right now is yielding 2.192. It hasn't given it up, that's for sure. What I would do if you're looking for mortgages, though, or you're going to refinance, go do it, folks, because the risk is much higher that the rates are going up versus going down. We might have just seen the whole ball of wax. Now, what's that going to mean for the marketplace when the market wants to pull back? Do people fly into bonds again? Yeah, they probably will. That's where the counter-trend bounces will probably come out. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. TFNN.com takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now up 157. You get the Nasdaq up 13. S&Ps are up 9. You're going to have light volume out here, folks, setting up a B to a C of an ABC structure on the way down. That's the way it's looking right now. Some of the high volume stocks in this low volume market. You have Alcoa down 71 cents. Intel's off 43. We got General Motors up 77. MGM is off 78. We have Hertz flat. Transocean's down 79. Lumber liquidators, that's getting smoked again. That's down 5.5. Let's see, $4.97, and that was a follow-through on 60 Minutes last night. That the Consumer Council, I believe, is going to end up looking at it. Between that and I guess the amount of emails that 60 Minutes actually got, they got a request from the Consumer Product Safety Commission. That was the bottom line. Bottom line is that. If you take a look at lumber liquidators, let's bring this up right now. What you're going to see is that this is an equity that wants to run to the $15 level. Right now you're at 28, and you talk about fast and furious. This is really fast and furious. Lumber liquidators were $69 the 25th. It's 28 right now. We pull this back, and you're going to see we put this on a monthly. There's no floors in between here. So that's what's going on here, folks. You have the last time was any juice in the stock was $26. $26.10 could hold it slightly, but then when we take a look at the ABC structure on the way down, if I do the full ABC, it'll be interesting. 119. Now that's still only $60. Yeah, that gives you a $19 stock. This thing wants to go to $15. So it's a confirmed ABC down to 19. Your level at 2610 was the high that was generated in 2011. It's barreling into that with monster volume. Down there on a monthly basis, it had 25 million. Thus far, this month, we've already done 88 million. So there's a big problem there. Apple. Let's go take a look at Apple. What do we have with Apple? What we have at Apple is this. The Apple iWatch is out today, and bottom line is the stock is not getting any juice, that's for sure. What is going to be interesting is, what Apple is pushing out here, pushing pretty hard inside this watch, is that it has a new research kit software platform that turns the iWatch into a diagnostic tool, drawing medical data from millions of potential customers, creating a boom for researchers and a headache for privacy advocates. There's no doubt about it, folks. With iPhone's user permission, Apple will be able to take data gleaned from the health app and share it with doctors and scientists to use for medical research, said the Chief Executive Officer Tim Cook at the Apple event today in San Fran. The information could include weight, blood pressure, activity levels, as well as information on diseases. Bottom line, folks, okay, I'm sure there's going to be plenty of people that are going to open everything up to the health providers, but that is like asking for trouble in an incredible way. What Apple did say inside that press release out here today when they were talking about it is that they said that they had already met they met with a couple government officials last year because they're already concerned about the aspect, FTC, yeah. So Apple executives met with at least 2 Federal Trade Commission staff members and Chairman Edith Ramez last fall to demonstrate the Apple Watch and the health app. Among the issues discussed was how Apple's products collect and use consumer health information. The company expressed a commitment to protecting consumer data and explaining that under the terms of the service, data collected by the watch and the health apps can't be shared with third-party data brokers. Big deal. Apple already, bottom line is that hackers break into everything, folks. The bottom line is that it's not going to be secure. They're going to try to secure it, no doubt about that. What is interesting about that quote there, actually, though, is that if you see what it says, that the apps can't be shared with third-party data brokers. They claim, well, they're going to share it with scientists and with, it's going to be the insurance companies that going to want that data in an incredible way. And with that, what are they going to want it for? They're going to want it for the basically turn around and do a better job of figuring out who's sick and who isn't sick and getting those premiums in place. Let's go to Tom in Ohio. Hey, Tom, what's going on?
How you doing, Tom?
I'm doing great, man. You having a good day out there?
Yeah, just got back from New Orleans Saturday.
Yeah, it was a long drive?
No, I flew down. It was,
Oh, good.
I'm the finance secretary for the local union. I had our conference down there this year.
Oh, that had to be a little fun.
Yeah, that would. Well, I worked. On their time, I worked. On my time, I had a lot of fun.
I love it. That's awesome, man. That's awesome. What are we going to look at today?
Well, I got Molly Corp. I'm wondering what you think about that.
MCP. So let's take a look at this. So you got Molly Corp. Molly Corp is trading at, this is hard to believe, actually. Am I reading this correctly? Is that 85 cents? Wow, man, this is a trip.
Yep.
So check this out, folks. Stocks in general are just such a trip. It's crazy. This is a stock that had traded to $78. It was $78 in 2011, and now it's 85 cents. How does that happen? That is crazy. Really, right? I mean, that's like about as bizarre as you can get. Let me just see something. And so they still, it's amazing, actually, because they take in $463 million. I got to see this. They have a market cap of $208 million. Okay, so let's see what we have here. So we come off the bottom, and I can see what you're looking at, that you come off the bottom with some strength. And, you know, does it want to test 113? Yeah, I can test 113. What I don't like that happened out here, Tom, was see how it came down on the second? It's like, okay, you're going to do, you know, what happened, folks, is this. It went straight up from 28 cents to $1.11. So this is where it's really important that you do percentages in the context of small equities, because it works the same way. And it's like, oh, really? You went up 200%? So in that context, this can pull back to 52 cents in a heartbeat, man. You know, right into that gap, and have nothing wrong with it. You know.
Well, I've been buying it for my son's IRA. I've been just for something, you know. I don't think they're end up being out of business. I mean, I guess you never know, but I just keep on put 100 a week or 100 a month in. I try and buy. You know, if I can get a $500-600 buying shares or something.
Yeah, okay, I can see that. What I would do, you know, so I wouldn't be buying in right now. I just wait, and if that comes back into that breakout area where that gap is with light volume, then yeah, because then at least you have a consolidation from like 32 cents up to $1.11. You know.
All right.
But be careful in the aspect that. Let me just see something. Let me just stay with me 1 second here. Okay, so it's not bad. Let me pull this up. I'm going to put this in a monthly again for a second. So what you have is this. The last time that we had big juice on the way down, it was at 553, which I like. 553 was, let's see, May of 2013. So what that means, you know, basically is that, yeah, on a longer-term basis, maybe a couple years, that's where it can go back to, man.
That's cool.
No, that's really cool. Right. Cooking, brother.
Thanks, Tom.
Have a great one, man. Have a safe one. This is Tom O'Brien. This is TFNN. You stay right there, folks. Coming right back. Dow Industrials right now are up 154. It's a dead cat bounce. NASDAQ up 13. S&P's up 7. We're going to 8.5. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 161, Nasdaq's up 15, S&Ps are up 8.5. And if we go up, when you take a look at the actual ETF structures inside of that, and you see what kind of a bounce we have. We start with the SPY, what you're going to see with the SPY. SPY right now is trading. So it has 67 million shares traded on the daily basis. We're at 208. We had hit a high about a week and a half ago with 73 million shares. You come off that high, and you come off that high with 180. And now you can see how the counter trend bounce is happening. What I do expect you're going to see here is this. The downdraft that was created on the 4th of March, that brought the SPY down to 209.06. Now, at that level, it rejected lower price, then went sideways the following day before a gap lower on Friday. This thing can get up into that area, and that's where I expect you're probably going to see the rejection of price. The free Qs are going to be something you want to absolutely keep your eye on and keep the correlation inside the market on. The reason being is this, is that the 3 Qs came off the high with volume. They're outside of the lower range, however. So 106.24 is the number. It can get in there easy, no doubt. What we still have opened in an extraordinary way for the Qs and the diamonds is this. The October 15th swing low is out there, and that is a big number, folks, because if you thought the market was down on Friday, that October 15th swing low number in the 3 Qs is 90.24. So it's a big number. There's no two ways about that. Now, something that, you've been reading a lot about the aspect of the dollar sign, the stress test that our banks have been going through. So inside that stress test, this is actually surprising to me, because inside that stress test, they're claiming that they were stressing these banks in an incredible way for something that, as markets pull back, as trades go bad, and all of the above. What is interesting is that, okay, and I do understand we're at 18,000 on the S&P, on the Dow Industrials. The remarkable part about this is that, the last downdraft that we had took us down to 6,400. Well, when they did the stress test, they did the stress test to 8,000. So it's like, oh, really? Because, of course, if in fact you get pullbacks like that, bottom line is that individual wealth, corporate wealth, all of the above goes south pretty quickly because it's paper wealth. It was really surprising that it's only 8,000. It's like, okay, we just pick that number out of a hat when the last low that was out here was 6,400. So when you take a look at the aspect of just a normal, well, it wouldn't be a normal correction. A large correction, though, could bring you to 9,000 in a heartbeat. That's a 50% correction of where you've been. So we'll see where that whole thing shakes out. Bonds are going to be the big number here going forward, I suspect, in the next 3 to 4 weeks. The reason being is that if, in fact, you get the full ABC structure on the way down, if you get in the counter trend bounces with lighter volume, that whole change of trend very well could have taken place. The thing that's going to be wild about that is what is going to happen the first time you have a downdraft. Is the amount of money going to continue to go into that bond, and that makes them come down a little bit slower, number one. And then that's the technical aspect of it. The fundamental aspect of it, no doubt, still has to do with Europe. There is no two ways about that. And the reason being is that today, in fact, I'll bring this up. I'll show you this here a second. I'll show you all these yields in Europe right now. And today was the first bond buying day out there. They plan on buying $60 billion a month. And you can see that, the yields, went down once again. The 10-year in France right now is 0.6%. Italy is 1.2. We're 2.1. Spain is running at 1.2. Competition for money and competition for rates in general. And this is where I guess this is definitely where technically you want to watch this thing versus a fundamental deal, specifically because of the way that the rest of the world is structured. And as money does go into those bonds, meaning the market moves south, money goes into the bonds, how will that shake out? Will there be more sellers than buyers? Big Blue, let's go over and take a look at Big Blue. Big Blue today has some price movement underneath it. We'll see whether it can get over in this 265 area, 165. Big Blue right now is trading up 219. That's last time was up. Every time it's up to 164, 165, it gives it up. That's the bottom line. What we do have out here today, you're at 3.2 million. We came down Friday with 4.5. Big Blue still looks like it's having a tough time and does want to get down to the lower end of this consolidation, which is the 149 area. We take a look at some of these higher stocks, whether they're going up or down, and this is what you have. On the way down, on Netflix, interesting. Netflix, Wynn Resorts. So let's go see what Netflix and Wynn Resorts is up to. Netflix right here today is trading at $4.44. What we have, you have 2.4 million shares traded. And if you do own Netflix, you know, bottom line is that this is going to go fill this gap. When you have gaps that are this large, and in Netflix case, it's just a monster. We get a gap that's open from 344 all the way up to 401. You're at 445 right now. You got a slight expansion with volume as it's coming down there. Most times what you see is this, folks. Most times you get to the gap, which in this case would be like the 400 area. You go sideways, you bounce higher again, then you come back and you start filling that whole gap area in. So that's something that you basically want to keep. If Netflix you want to get into, let it fill that gap. If you're basically selling Netflix, let me see what that short interest is right now. So the short, that's nice, it's coming down, interesting. The short interest in Netflix is 9.9. So that's coming down somewhat. If you want to see something with a short interest that's an absolute mind blower, watch this. GPRO, GoPro. This is pretty amazing, actually. So GoPro is trading at $38.09. The short interest is 64.7%. That is unbelievable. You know what's unbelievable about that, folks? That you have 6 out of every 10 shares getting brought back, 6.7 to be exact. And GoPro still can't get a bid. GoPro's just gone from $98, oh my God, down to $38. And if we bring this back a bit, oh man. So this thing go to $28. What did this go public at? This is going to take a lot of people south. It has taken a lot of people south, but look at this. Okay, so it went public at 24. It did a secondary. Oh man, this guy's so smart. He did a secondary at 75. Can you imagine? He did 11.9 million shares on November 19th at $75. Wow. That, folks, is incredible. 75, 38, 40, what's that? $37 times 12 million. How's that? That's, you're talking some real action here, meaning getting taken down in a very large way. ExxonMobil, what do we have with ExxonMobil? ExxonMobil out here is having a hard time. It went under its range. When we talk about the October 15th level, this is something that's already under the October 15th level. That's 86.91. You're at 85.43. This is basically has broken all its support. So your next leg down here, this is going to be intense, man. So we're at 85. If I pull this back to put us on a monthly for a bit, no, I'll put it on a weekly first. You put it on a weekly, and what you're going to see out here, this is ExxonMobil's trading where it was trading in December of 2013, and it does have a high volume swing low at 67, and the high of that week is 73. So the way this is set up right now, there's going to be a lot more downdraft happening in this oil market. That's the way it seems to be set up at this particular point. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials are up 156. NASDAQ is up 15. S&Ps are up 9.5. Gold's trading 1165. Silver 1570. Bonds, the 10-year 126.13. The 30 156.25. 25. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow right now is up 157. As we come into this closeout here, what I expect you're going to see is that volume is going to stay weak. Inside the NYSE right now, we're going to end up doing about 650 million. That's versus 903 on the way down on Friday. NASDAQ is really anemic. And NASDAQ's going to come in about 1.7, maybe 1.65 versus 1.9 on the way down. After the close out here, we're going to get a few numbers. One of the ones I suspect most of the retail is going to be watching is Urban Outfitters. Why? Because if you take a look at Urban Outfitters, let's pull this baby up. What you're going to see is that the equity itself has made quite a run back from a downdraft that it had. The low for the year is $27. The high is $40. This equity had basically got toasted and roasted about 5 months ago. It goes from it went from a price point of that $40 down into $27. Since November 18th, that's when it's been making its way back. Now, if we put this on a weekly, what you're going to see is this. We're coming right up to the top of the range. And the way that we got here is this. Well, if we go over to 2012, let me show you this. This is pretty cool, actually. You go over to 2012, and it had strength all the way up to $37.68. Then what you did, you stayed up at the highs from 2012 going all the way over to 2013. The 2013, and this is right where we are right now, this is where the level, you're coming into this level, and as you're coming into this level, this goes into September of 2013. That right there is where we're coming into. The high of that is 42.79, the low is 37. Bottom line is that I expect what you're going to see here is that, yeah, you can test the 42, but I suspect that's where you're going to get a failure here. This is why. When we had come down, we come down at 26.7 million shares. 3 weeks ago, we did 5 million shares. Last week, we did 5 million shares. You're coming into 26 million. If you're going to make it up and above an aerial, you don't come into it with 5 million versus 26 million. You certainly, and what you don't do, by the way, folks, is this. You don't come into it the first and second time with more volume. What you do is that you have an expansion of volume as you're coming into that area. We don't have that. So your supply line is set up going from September of 2012 all the way over to September of 2013. So you have a full year of a supply line there. So what normally would happen on a fundamental basis is this. You're coming up to that level. Everyone that was buying, that bought at that particular point, that's taking the heat all the way down. You got to figure something. A stock's at $39. You take heat down to 27. Bottom line is that's coming back up here. That's what a supply line is all about. That's where you're going to see some people just selling just to get their money back. That is what that supply line is all about. So this is going to be pretty cool seeing what they have to say and where that thing trades after the close, because that will come out pretty soon, right after the close of trading today. Inside the REIT area, there's a big takeover that they're going to try to pull off. Simon Property, which is the largest property owner, that's SPG, largest mall owner out there. And Simon had got whacked pretty good, as all the other large commercial REITs had got whacked last week. Simon is off its high from 205. It's trading 180. That's setting another ABC structure up on the way down. What they're making a run after Marrickridge. Okay, MAC is the ticker symbol. MAC had closed MAC had closed on Friday at a price point, excuse me, folks, of 86.72. That's trading 92.64. If, in fact, they get to pull this off, because this is like a bear hug, the other firm does not want to get taken over. Bottom line, though, we'll see how that baby does shake out. One of the really intriguing stories out here, looking when we're talking about biotechs, folks, is pretty amazing. And what it is this, and this was, let's see, this wasn't in the Wall Street Journal this morning. It's in a Bloomberg article. But check this out. So, the Gilead Science has a hepatitis C treatment that is very effective. The treatment costs $1,000 per pill. It's a 12-week treatment that I believe gets into, because when you see the difference in price, it's like insane. Yeah, it's $84,000. Okay, it's $84,000 for a 12-week treatment. Well, what you have here is that in Bangladesh, and of course Bangladesh is the poorest country in the world, probably one of the poorest. That same pill ends up costing $10. So when I was reading this article, I was saying, well, you got to be kidding me that it can be that dramatically different. So it's $900 for the 12 weeks versus $84,000. It's like, okay, people are going to start basically flying to Bangladesh to get this thing done, And what it is, this is what it is. And I believe it's not. There's a company that's making it there, and it's not illegal, because the way I was reading, it seemed in this article, is that the patent protection for life-saving drugs in Bangladesh and other countries that are that poor, okay, are not applicable. That's what this comes down to, and it has something to do with the aspect of making sure that. Yeah, founded in because Incepta has 600 different products approved for sale in Bangladesh. It's not like they're approved other places. But the bottom line is that it's pretty intense. The Doctors Without Borders, they, look like they're going to be able to get hold of some of this, so that, in fact, what ends up happening, they could get cheaper drugs. But when you take a look at the aspect of the price differential, that is like so far over the top, it's unbelievable. As we come into the close out here, what I expect you're going to see, you'll see the slight sell-off coming into this close. This looks like a classic ABC structure on the way down, folks. You got A to B, wide price spread, accelerated volume. B to C, you get a bounce going with light volume. SPY's at 208.41. That just starts the next leg on the way down. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming right back. We get some numbers after the close. Dow right now is up 142. You get the Nasdaq up 16. S&Ps are up 7.5. Gold's trading 11.65. Silver 15.75. Bonds, the 10-year up 12 ticks. 30-year up a full point. I'll be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. We're kicking into spring, folks. Not bad. We got another 10 days. Let's take a look. This is a quote by James Garner. Believe in yourself and everything you can be. Market-wise, let's take a look at it out here. With the Dow Industrials finished up 138, NASDAQ up 15, S&P's up 7.5, gold contract up $1.20, trading at $1,165 an ounce. Where is he? Silver up flat at $15.72 an ounce. Platinum down 14 at $1,148 an ounce. Copper up 5.5 pennies at $2.68 a pound. Light sweet crude up 36 cents, $49.98 a barrel. Bonds, we had the 10-year up 11 ticks, 126.13. 30-year up 1 point and 3 ticks at 156.23. Both of those folks bounced on light volume. What you had in the bond market on Friday, the 10 and the 30-year, took out a B point of an ABC structure on the way down and took it out with volume. That's saying that yields are going to go up. We'll see what happens after this first ABC structure on the way down. It looks like we very well have a total change of trend in the bond market. And if that's the case, you're talking about a change of trend since 1980. That'd be pretty wild. Would make sense since short-term rates are at zero, but bottom line is that Europe, the rates actually continue to go down. So it's going to be interesting to see how the Fed plays this out with the context that Europe rates are still going down. It just may be that the market is going to play this out, and the market itself is going to continue to sell these bonds off. And if that's the case, well, guess what? It's supply versus demand. King dollar up 26 ticks, trading out at 97.63. The euro up 8 ticks at 108. And the yen up 34, trading at 121.17. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, let's get over and take a look at the SPY. What you have here, folks, this is going across all the indices, too. You have an ABC structure down in the making right now. What we have done is this. We came off the high, and we talked. It's a small ABC. Bottom line, point-wise, your A point is that high out here, which is the 121.24. Your B's Friday's low, which is I'm sorry. The high is 212, not 112. 212.24. Your B point is that 207. So you're talking about $5. C, I suspect that the C point that we probably can get up into a few more pennies. The low that was established on the 4th, that low there, where we did reject lower price and then went sideways, that's 209.06. You know, so that's about another 80 cents higher. I suspect we very well could go up and touch that. That's where you give it up. That's where you, if that's the C, which I expect more than likely it's going to be, that's where you take those 5 points away from. What would that set up? Well, what it sets up thus far is this. The SPY itself is inside the lower range. That lower range is saying it wants to go down to the swing points from December as well as February in the SPY. Those swing points, that relates to a 197.91 area. If we go to the cash S&P, and you want to be taking a look at the cash S&P, this is where it's set up inside the cash S&P. The cash S&P right now is trading at 2080. And if you remember, any close, and it was closed last week, was under 2110. You close under 2110, and what that's saying, what that is not saying, is that you're on the wrong side of the up channel. We had broken that up channel. We had broken that in October. Then it got back on the right-hand side of it 3 separate times for 2 or 3 days. Gave it up each time. What that sets up, number one, is that you're going to go for the 1972.56 in the cash S&P. That's the smaller range, however. The larger price point here is 1820. 1820 to 1870 is the October 15th high volume swing point. You know, and that high volume swing point, folks, has been tested by many equities. Many equities have broken that. And in fact, if you take a look, let me just see if Chevron's underneath it. ExxonMobil, of course, Chevron's under it too. This is the XLE, the oil companies in general have some monster price problems inside the marketplace. I don't expect they're going to have any real cash problems because oil is not going away. There's no two ways about that. But what you do have in both cases, Chevron right now is trading at 103.95. That October 15th swing low was 106.65. So it took it out in spades. We go over to ExxonMobil. You take a look at ExxonMobil. ExxonMobil right now is trading at 85.16. That swing low out there was 86.91. Also took that out and took it out in spades. That sets up much lower prices. Gold contract. What do we have with gold? We take a look at the gold contract. Wide price spread, accelerated volume on Friday. What the contract did not do, which was positive, particularly in the face of the dollar doing an ABC structure on the way up, is that it did not basically take out the swing point from December 1st as well as all the swings from November. I suspect what I'd like to see first is this. Silver did this, but gold hasn't done it yet. I want to see gold test the 1162.90. Silver did it today. Silver, this is. So what silver did, silver tested the lows of Friday. We are at 1573, or as close as you can get. It actually has closed a penny underneath it, huh? That's pretty amazing. So anyway, so silver didn't reject the price yet. We got lower volume today. Intraday we had it rejected. Bottom line is that silver is showing though that it has been stronger than the gold market. Bonds. Let's go to we'll take a look at the TLT, the 20-year plus for the bond market. Bottom line is that that's an ABC structure on the way down. The TLT is traded at 124.64. Your A point is 138. Your B is 125. So you get $13. That sets up a 117 TLT. So we'll see how that does shake out. But it looks like now what we've done in the bond market is that you're doing another B to C of an ABC structure on the way down. That would be a smaller one. So now what you're going to have, you have multiple ABCs. You have a smaller one inside a larger one, which basically brings the probability higher that, in fact, bonds are going to lower price. Let's go to Dave in Clearwater. Hey, Dave, what's going on?
Tom.
Hey.
What a ride that was last week, my friend.
No doubt, man. Hey, how you been?
I've been doing very well. How about yourself?
Good, man. Good.
I was thinking about you, man. I was looking at the bond market. I'm like, wow. I wonder if what Tom's going to say when this is all screwed. I know you've been bullish on bonds like since the day I met you.
I know.
I'm thinking to myself, this bull runs over. What's after that move?
I know, man, and it's really good. It's really important if we can get this thing right, because that is going to be a dynamic change, and it looks like it is, man. I mean, right now, hey, we'll see where it's. But I'm going to start selling the counter trend bounces.
Yeah.
I mean,
no
that's where this seems to be setting up. It's hard to figure out because the rates continue to get down across the world. It's like, okay, how are they going to pull this off? But listen, if everyone sells the bonds, it's going to happen. That's
Yeah. Well, as you taught me a long time ago, ignore the noise and look at the charts.
Yeah, no doubt.
Tell you where it's going, where it's moving. But I might be, I know you feel the same way too. But I'm of the opinion that we are, while there are still areas that are not that great. I'm not trying to say it's the bull run of the 90s in terms of economic growth, but I think we've hit bottom. We're coming up, and before too much longer, this massive amount of liquidity that the quantitative easing is put into the banks, which are now sitting on the ledgers and not being loaned out, which is why I believe, in my opinion, why we're not seeing inflation as small businesses and companies in general come into banks with a solid business plan, and they start to see, okay, it makes sense to loan this money. As they loan this money, the economy will continue to grow further. We'll get the velocity. We will have the inflation at some point. At some point, I think the collapse in energy is kind of, put a curtail on that for the short run, let's say the next couple of 2 to 3 quarters. But as time goes on, I think we're going to see that, and then that's when the inflation is going to kick in.
No, I agree, man.
At that point, interest rates are going higher.
I agree. Here, just stay with us. Dave, stay with us. We're coming right back.
No problem.
Cool. Stay right there, folks. Coming right back. Dow is up 138. Nasdaq up 15.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're talking with Dave from Clearwater, and I believe we're going to be talking about what, KOL, Dave?
Yes, sir. It is extremely hated, which is why I've been watching it for a while now. It's a ETF exchange-traded fund for coal.
Yeah, you know, it's interesting here. So check this out. During the break, okay, I actually brought this up, to look at the weighting structure, right? And the structure that's inside it is like, okay, I suspect they got a couple coal mines in it, but what you really have in it, like Arizona Holdings is number one, Dave, which is a transportation company in Australia. United Tractors is 2. Joy Global is 5.
It's like calling anybody who's tied to moving it around is what it looks like to me.
Yeah, it does. It does. So this is something I would pull those top 10 because you got Arizona's 8.5, United Tractors is 7.6, then you got the China firm 7.3. Anyway, that being said, that gets really interesting because this is what you also have happening, folks, okay, is that in the context that when you pull something like this, you'd think automatically that, okay, hold it. This is all coal companies. Well, guess what? It's not. So it's like, okay, this thing could have continued to get sold off, period, because ETF structures can do this in a heartbeat too, folks, okay? That, hey, listen, that's, because the name of this is Market Vectors Cold ETF, okay? So it's like, okay. Which is pretty cool, which is counterintuitive and to the aspect, I think, once you really pull into that. I mean, Joy Global is a lot more than coal.
Right.
Anyway, that being said, I can see what you're gunning for. I mean, what he's gunning for, folks, is that this hit into this 1466, and basically it had some juice on the way up. Now it's pulling back. The real key is, I guess, it only got 6 pennies to go under this low. You don't want to go under the low. And it had an expansion of price today and volume. So I'd let it reject it first. You know what I mean?
That's what I was thinking. Waiting for a retracement on lighter volume, and then, hit it once the test is done on that 1345 price point.
Yeah.
Because I was looking at it's got a nice, high volume high on the, you see on the 25th and on the 24th of February with a nice expansion in volume, then coming back. So I'm thinking, let's wait for a test on 1345, rejection, sign of strength, the normal. So kind of keeping an eye on that one for a while.
Okay, so I see what's happening here. It's coming into the 08. Now, this is pretty cool. It's coming into 08 with dramatically lighter volume. Let me pull this back further. I just saw this. So
yeah, if you put it on a monthly,
yeah, I got it.
It's
right.
a good looking setup.
It is. So you're pulling back on a monthly basis. On January, we pulled back with 1.1 billion versus 8.4. Yeah, that's a nice setup there. Yeah, and so on the other side of it, let's see. Last time we had any real juice on the way down is $22. So, and that what's cool here, folks. That can be a dead cat bounce because it went from 50 down to here. Watch this. Let's just see what that is. This is where this gets bizarre when you do some of these because, yeah, a .382 is $27. A 5.
Exactly.
Yeah, exactly.
Exactly.
And that could be a dead cat bounce, folks, and not want to go anywhere else. But yeah.
Exactly.
Yeah.
I know. I was looking at that like a dead cat bounce on this thing is nearly a triple. Or a double rather.
Yeah.
I mean, I was like, wow, look at this thing.
No.
Yeah. Hey, we got time for one more?
Sure.
Looking at the SPY, the thing is, I tell you, every time this thing sells off, the bulls get rewarded on the bounces because the money steps in. Everybody's convinced, this bull optimism. But we'll see how it shakes out, Tom. Intraday, I'm sure you're well aware of this, but intraday, if you put it like on a 30. We just completed an ABCD down off to your monologue there in the opening in the 4 o'clock hour at the 212.24.
Right.
And what you see is if you look at the bounce that started from that hammer doji coming in, let's say if you do it on like a 30-minute, coming in on the last half hour of Friday's trading, take that as your A point, your B points anywhere in that consolidation in the 11, let's say 10 o'clock time frame on right around, let's say 208.34, let's say you take that as your B point. You see the bottom of that consolidation. It gives you a projected D point of around 209, okay? And 209 is essentially coming into, a really high volume bar from Friday at around 11 a.m. when you had a downdraft of around, let's say 10 million shares. So that would be a nice rejection to look for. The second thing, it would be an ABCD up, which brings it to the 382 retracement off the move down from 212.24. And it'd be interesting to see. To me, that's a point I'm looking, if I see a rejection of that bar, I'm looking to sell again, because I closed out when that ABC pattern completed on Friday, but I'm looking to sell again at 209.
That same number, Dave, is the low that was established on the 4th, where we rejected it. It's 209.06. And what happens here, folks, when we're talking, the SPY is trading at 208.36. But, if you've traded in the option market at all, the bottom line is, folks, the VIX continues to stay low, and these options are cheap, and it's really crazy how they, they can push them up a little, the VIX gets crushed, and the bottom line is that you're getting a $200 in the money option for $2. Okay,
yeah.
Which
no doubt.
That's a lot better, folks, than especially if you're going to stay in for a small period of time, because you're going to get almost a point for point when that's moving. The delta is going to be point for point. So the two.
Yes. If you stay like $3 or $4 out of the strikes out,
right.
3 or 4 strikes out, your delta is in the 0.8, 0.9 range. And the thing is, if it moves quickly, your delta goes to 1.0. Even if it doesn't, just the increase in volatility, you pick up a little bit of a premium on the intrinsic value. And you can pick up a little extra money just on that because of how the volatility increases based on the movements. I'll tell you the other thing too, when if they're at you, is if you look at the bar daily now on the 20th of February.
Okay.
We know that high volume bars tend to act as resistance and support. And if you look at the bottom of that bar, it's around 208.73. If you look at the open, it's right at 209. So in that range, that could be another area that will either act as a sign of resistance, or if it gets up over it, it's a sign that we're going to, retest the highs again. But that's something else to kind of keep an eye on, man. Either way, I'm really, really hoping, between everyone getting freaked out over the potential of interest rates going up, that we can actually have, a sustained correction, Tom. Something we've barely seen in a long, long time, man.
That's a fact. There's no doubt, man. There's no doubt. Hey, the thing that is absolutely wild, this October 15th number that I keep talking about, the oil stocks are already down there. Exxon already broke it. Chevron broke it. Google was already there, did a bounce out of it. It's like, you know how this game goes for me anyway. I mean, we're going there. So the real question is, okay, when?
Right.
And folks, let me tell you, that October 15th swing low, they're going to be going crazy. That's insane. Yeah. Because that is like a real correction, but because we haven't had one in so long, it's not going to be pleasant, man.
No, I don't think it'll happen. Exactly. Hey, Tom, thanks for taking the call. I appreciate it.
Have a great one, man. Have a safe one. You stay right there, folks. We'll get our man, Mr. Chad Coker, coming up next from TD Ameritrade Thinkorswim. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials finished up 138. You add the NASDAQ up 15. S&Ps are up 7.5. And as we do each and every Monday at 30 past the second hour, we have our man, Mr. Chad Coco from TD Ameritrade Think or Swim. Chad, folks, has the best option show on the planet right here. Every Tuesday, 12 to 1 Eastern Standard Time. Outstanding show. Now, you can get that program, folks, right on your cell phone, tfnn.mobi. So it's tfnn.mobi. You want to get Tiger TV, just do tfnn.com. You'll see on the right-hand side, there's a little box. It says mobile devices. Hit that device. You're going to be able to bring up the audio plus Tiger TV. And if you haven't test drove the Think or Swim platform yet, the way you do it is this. Go to our website at TFNN. You're going to see the banner on the top and the side. You can hit the banner, bring the account up. They will put paper money into your account. They'll let you trade with paper money. And, folks, everything's on one platform, whether you're trading options, securities, commodities, or currencies. One platform, you can do it all. Chad Coco, what's going on? How you doing, Chad? Chad?
Yeah.
How you doing, man?
Pretty good, pretty good.
Good. It was good to see you in New York. It was It was freezing.
It was definitely. It was cold and snowy.
Oh my God, that was crazy. And now, so how's the weather in Chicago right now? Is it getting
50 degrees today, so
beautiful.
Starting to warm up.
That is a good thing. I like that, man. That totally makes sense.
Market's up, weather's nice. Good day.
Oh, there you go. Market's up, weather's nice. Well, hey, let's talk about this a little. You know what's interesting is that I was just talking to one of the last calls, and we were talking about the SPY, and you know, it was pretty cool even last week. The premiums on like the SPY, you know, I wasn't trading the Qs, but I was trading the SPY, was so minimal. It was amazing, man, for a $200. And it's still, I mean, you know, it's amazing that you can get at the money for $2 instead of $208.
Yeah, very low volatility there.
Yeah. And it moves, man. I mean, it moved Friday. That was a nice little deal, man.
Definitely does. Yeah, I usually like the higher premiums because I like selling the options. But if you're an options buyer, you like that little bit more risk you find in there. It's a good time.
Exactly.
Don't have the deltas working against you.
Now, you know, and we talked that, you know, today I was watching Apple. I was watching Apple shake out, and now Apple's got a little premium in it, no doubt about it. But that'd be expected, right, with that announcement, and people a little. Well, they want insurance money, right?
Yeah, definitely. The announcement is kind of that played into the old rule, buy the rumor, sell the news.
Yes.
When the news came out, and they sure enough fell down a little bit. I was kind of surprised on that.
Yeah, well, it is interesting because, and then they had the expansion of volume too. You know, it's like, okay, Apple did 88 million shares today, folks. And bottom line is that, you know, it broke these last little lows, just slightly, but that little expansion in volume said quite a bit. I guess the real question is going to be how many watches are going to get bought and sold, right?
Definitely.
Now, when we come into, you know, we got window dressings all over. You still have a few earnings that are up there, but what are we going to be looking at this week?
In terms of the show tomorrow?
Yes.
We're going to start covering some more using the grease that we've talked about in previous shows and some of those strategies. I'm going to get into weekly options and where those came about and how to use those strategies we talked about before, use those in the weeklies. So.
And of course, cool. with the weeklies, what ends up happening with the weeklies, you're paying a less of a premium, right? Because you have less days, so there's less decay, there's less of all of the above, right?
Exactly, yeah. But on top of that, so since it's the last week of trading the options, if you were looking at like a monthly option, theta, so your time decay is much greater in those weekly options. It's kind of similar to the last week of trading a monthly option.
Okay.
So the premium that's in there, it gets sucked out really quick. So if you're selling premium on that, you don't have to wait as long, or you don't have as much risk for the time on those.
Which is nice. I mean, because a pure option trader wants to wake up in the morning with decay working for him, right?
Exactly. And even somebody who's just using covered calls, instead of just waiting every month to sell those covered calls, you can do that every week and just compound your profits on that.
Sure. So let's talk about the show a little. You know, there was a good little crowd there. What kind of feedback did you get at the show?
A lot of feedback doesn't related to features that people were looking for in the software. A lot of people just didn't know where some stuff was at or where features were located in the software.
Okay.
We got some couple new product ideas coming out of the show as well. It's a lot of good feedback both ways. Nice.
You know, because what happens, folks, is this. You know, if you haven't test drove Thinkorswim, go do it. It's an amazing platform. And when Chad was just saying about a couple new features, what does happen, which is pretty amazing, I don't know what build we're on right now, but I think it's in the 600s. I know that. So what happens is when you go to sign in, so we get a new build, and it only takes a second. Well, it takes 30 seconds or something. You hit one thing, and it builds it all up again. It is amazing just how much you guys continue to work on that program, though, man.
Yeah, so we had a release this past week, and we added some new features to the scanning and then a lot of back-end enhancements to support future development. But I'll show some of that stuff tomorrow as well.
Awesome. Well, listen, folks, the show tomorrow, noontime, and don't forget, all the programming at TFNN starts at 8 o'clock in the morning. 8 to 6 live programming. We'll replay that programming right on your cell phone, tfnn.mobi. Well, I'm glad it's warm in Chicago, and, you know, we get the spring training down in Florida, and we got you guys, you're going to be playing baseball before you know it there, man.
This is true. Looking forward to it.
I like it. Okay, man, have a great one.
Nice talking to you.
Have a safe one. Let's go to Mike in Thailand. Hey, Mike, what's going on?
Hey, Tom, how's it going, man?
It's going great. You having a good day out there?
I'm not doing it. Could be worse, put it that way, you know? I'm a little frustrated. I'm using this Thinkorswim platform. There's a part of it that I really love it, and there's a part of it that I think I don't want to say on the air. You know what I mean? It's best that I don't.
Well,
but anyway, go ahead.
Well, why not? Well, tell me. I mean, I use it every day, so tell me what you don't like.
Oh, well, you use it every day. You're used to it. But anyway, anyway, there's just things like, for example, I had to call in today to an order because the thing got gummed up, and I'm like, well, what are you doing? You know, I can't afford to keep calling you guys when I get, you know, when I cancel an order. You know, I got to be this myself because there's going to be times when I can't get through, that kind of thing. Do you see? Otherwise, it's really interesting. Otherwise, there's other things they can do to make it a little more idiot friendly. You know what I mean? So,
I don't, but that's okay. I guess what I would do first is make sure, just as you're talking to me, I mean, you're all the way in Thailand, that's one thing, but you can tell by the communication that, you know, that's going to be a tough one, period, because you're breaking up just on the phone, never mind on a computer line. So, anyway, what do you want to look at today?
All right. Before now, when I was on the phone with TD Ameritrade, somebody in the den alerted me about Exxon. He said, did you hear what Tom just said? He doesn't like it. And the reason why he told me that was because I bought one call. I'm short some calls on the SPY, and I agree with what you said before about the SPY. That's like the only thing I trade now because of the narrow spreads. I really like that, you know?
Okay.
And anyway, I hope you're right, Tom, but I just, you know, I'm not convinced this market is ready to break yet, you know? So what I did is on a little hedge, I bought a couple of calls on Exxon because I think it's based real nice, and I did it as a hedge to go against my puts. I bought calls on Exxon to go against my puts on my SPY. Now, why? I'm sorry to ask you this again, but I was on the phone with my broker. Why don't you like Exxon? And I hope you're right.
Well, it broke. I mean, it's broken everything. You know, the October 15th swing I'm talking about, it's already underneath that. Today it basically broke every low going all the way back to, looks like I'm back to April of 2013, and what it's gunning for, Mike, is that you get a high volume low laying out there June of 2012. That's where this thing wants to go now.
Okay, now I hope you're right, but I don't see a clean break on this. I saw a low today of 85.12. That only betters if I go back 1, 2, 3, 4, 5 months. That only betters 85.64 in October. It betters the December 15th low.
Yeah.
It betters the end of January low. That's only 85.39. And today it 85.12. That's not and now don't be afraid to insult me or say anything bad over the air or anything like that.
Yeah, well, listen,
I'm more
Mike,
interested in making money.
Go
ahead.
I understand what you're saying. Specifically, you're saying with a clean break. That would be, I'd say, okay, more wide price spread. Bottom line is that it's sold off, you know, since 104, it's at 85. It can't hold price, you know? So we'll see where it goes. Have a great one, man. Have a safe one. This is Tom O'Brien. This is TFNN. You stay right there. We're coming right back. Dow Industrials are up 138. NASDAQ up 15. S&P's up 7.5. Gonna be right back, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We had the Dow finish up 138, NASDAQ up 15, S&P's up 7. And, folks, if you'd like to test drive my daily newsletter, the way you can do it, come to our website at TFNN. Go to newsletters, trading newsletters, market insights. You can test drive it 2 weeks absolutely free. If you'd like to test drive the gold report, as you hit newsletters, hit investment newsletters, you can test drive the gold report 30 days absolutely free. Now, let's go over and we take a look at the XLF, the financials. Because what is intriguing out here is that these financials did not move today after basically very subtly moving lower on Friday. So if we take a look at this XLF, the XLF right now is trading at 24.34. What we had on Friday is this. The high of the XLF, first off, is 25.14. That high was established in December. It gets down to a price point of 22.89, makes its way back up to this 24.50 area. On Friday, what we did is that we went from try to get to a higher price first and then just couldn't handle it. Try to get to 24.66. That 24.66 had basically taken out the range that it was in the last few weeks. But what it's going smack into, folks, is this. It's going into the initial downdraft from its high. The high in the XLF is December 31st. That high, we came off that high with some juice on the way down. First day, you did 45 million. Second day on the way down, 51. And then you ended up with 58. We were coming into that area on Friday with 60. It couldn't handle it. Today, you bounced to 21. So what that baby is setting up, first off, is to get into a run down to 22.89. That's the smaller target. Your larger target is hanging right down here at that October 15th swing low. And this thing is sticking out like a sore thumb. That is at the 21.55 area. So it's certainly a big number. And inside, of course, the XLF, Berkshire Hathaway happens to be the largest weighting structure inside the XLF. Berkshire is trading at 146. That's down off a high of 152. That looks like it's also a building cause for the 132 area, and we're at 146. That 132 area also is the October 15th swing low. That October 15th swing low, whatever equities you have, go look at that October 15th swing low, because when you get the amount of equities that have already tested it, and many of them are underneath it, bottom line, that's where the market will go. The market could hold there, could certainly hold there, but right now, that's where this market is building cause to get into. The XLE, the Energy Select. What do we have with the XLE? XLE is trading at 76.23, and what we have with the XLE is this. The October 15th swing low, which we're underneath right now, is the 77.51 area. So you already blew that out. When we did blow that out, which was in December and in January, what is laying down there is another high volume swing low. So on the XLE, we have 72.51 that's laying out there. That is on the weekly basis. If we change this and we put this on a monthly basis, what you're going to see is that we are back inside. Now, this is really important. We're back inside the 79 range, and that means that was a false breakout when we went above that range in April. So what the XLE did, what energy did is this. Now, this is a classic too, folks, meaning that you break higher, a false break. So what a false break is this. False break up or false break down. Talk about a false break up first. False break up, to me, you get over the highs, you have dramatically lighter volume. You come back into the other range. Now, for folks that don't do volume, a false breaks flat out would just be you get over the highs, it doesn't hold, and you come back in. But watch this correlation, because it's as intense as you can get. The highs that we were going over in the XLE were the 2008 highs. Those, we had volume out there of 560 million as well as 800 million at 85 and 89. We broke out of that area in April. Well, when we broke out in April, guess what? You had 236 million shares versus 560, or versus 860. You stayed up there for 4 months. You stayed up there April, May, June, and then July you went sideways, August you went sideways, and then guess what? In September, you start coming down with volume. September, you came down with 262 million, and then watch this. This is the important one. Bang! 760 million in October, 782 million in December. What do you have? You have volume off the high. Everyone's trying to get out of the gate. They get out of the gate. Now you're back inside the lower range. Once you're back inside the lower range, what does it set up? Well, we have a high volume swing low at 71, so that's where it wants to go first off. I suspect that this one here is going to come down to about 63. And where I'm going with the 63 is this. 63 is, on a monthly basis, the highs of the low of 2008. That's the October swing point. That October swing point, more than likely, well, let's put it this way. If it ever breaks that thing, it would need some real juice, because that October bar had 1.3 billion shares. But that's where this thing looks like it wants to go right now. And in fact, if we turned around and said, okay, do we have an ABC structure on the way down? Your A point on this would be the high of 101. Your B point is the 71. Yeah, 30 bucks, which is 53. So check this out. This is pretty cool. If this is an ABC structure on the way down, your price projection is 53. 63 is the top of that bar. So I expect what you're going to see is that that's where this little baby wants to basically get down and get into. We go over and we take a look at Bank of America. Let's go BAC. We go back to the XLF for a second. What you're going to see with Bank of America is that Bank of America is making her way down to the lower end of the range. It's already off the high of 18. Oh, this is a cool one, too. So check this out. This is pretty wild. So what Bank of America has also done is this. There she is. October 15th, the October 15th swing low on Bank of America, $15.43. We came down, we broke it in December. You broke it in February. We got above it in March. Now what are we doing again? We're marching down into that area once again. That area, folks, is crucial. It's crucial to wrap your head around that area, because the thing that's amazing, and I've seen this dozens of times over the years, it takes months for all these to get down there, but guess what? They all work themselves down into that area. Pretty crazy. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking it right back here tomorrow. Go get them, folks.